Okay, let's talk about AI. It's everywhere, right? Everyone's talking about how it's going to change the world. But when you see trillions of dollars flying around, you got to ask, is this for real? Or are we living through another dot-com bubble just waiting to pop? That's what we're going to figure out. We're going to dig into the evidence. All right, so here's our game plan. First, we'll tackle the big question. Is this a bubble? Then we're going to follow the money, because that's where the clues are. We'll look back at history, see how this compares to other hype cycles, and then we'll talk about what happens if or when it all goes pop. Okay, let's just get right into it. This whole thing, it's way bigger than just looking at stock prices. We're talking about the foundation of this entire AI revolution. So, is it a bubble? It's the one question that ties everything together, right? From crazy high stock prices to these mind-boggling infrastructure deals. And the only way to even start to answer it is to follow the money. And that brings us to our first big clue. It comes from a Bloomberg analysis, and boy, did they find something interesting. It's a classic red flag that something's not quite right under the hood of the AI economy. They're calling it a circular flow of money. Think about it like this. Imagine a tiny village. The baker buys meat from the butcher buys candles from the candlestick maker, and the candlestick maker, he buys bread from the baker. See? The same money just goes around and around. It looks like a booming economy, but no new cash is actually coming into the village. That's the fear with AI right now, that it's all just an illusion of growth funded from the inside. And here's how it's actually working in the real world. You've got giants like OpenAI spending just billions on chips from Nvidia. And this is the crazy part, it's not just a simple transaction. A lot of these deals involve stuff like equity swaps. So OpenAI invests in Nvidia, and Nvidia invests right back in OpenAI. They literally own pieces of each other, and then they become their own biggest customers. It's this perfect self-fueling loop. But the billion-dollar question is anyone outside this little circle buying enough to keep the whole thing from collapsing? And the numbers, they're just staggering. We're looking at a potential infrastructure surge of $1 trillion. A trillion. When that kind of money is swirling around in what might be a closed system, the stakes for the entire global economy get unbelievably high. So yeah, this circular money thing is a huge red flag. But to really get what it means, we need to pull back and look at the bigger picture. Because believe me, this isn't the first time some new tech has set off this kind of wild gold rush-like frenzy. History actually gives us the perfect map for this sort of thing. This right here is the Gartner hype cycle. It's a fantastic way to understand what's happening. The idea is simple. Real technology, it gets better pretty slowly, pretty steadily. But our expectations, oh no, we go crazy. We get swept up in this tidal wave of hype that just skyrockets past what's actually possible. And that huge gap, that gap between the hype and the reality, that, my friends, is bubble territory. And get this, according to Gartner's own crystal ball, generative AI has already summited the peak of inflated expectations. You know what that means? It's now heading straight down into the trough of disillusionment. And that's exactly what it sounds like. It's the morning after the big party. The hype fades, the tech isn't quite the miracle we were promised, and all those companies that poured in billions start looking around going, so where's our money? It's when the reality check hits. Hard. And this isn't some one-off event. Just look at this timeline. It's a pattern that repeats over and over again. You could almost say that bubbles are just baked into the system. It happened with railways in the 1840s, radio in the 20s, and of course, the big one we all remember, the dot-com bubble. Every single time, the script is identical. A game-changing new technology comes along, everyone goes nuts, and the investment money just flies in, way, way faster than the tech can actually deliver.
Yeah, that dot-com comparison, it's just too good to ignore. So let's really lean into it. Let's put 1999 and today side by side and just look at the warning signs. It's kind of spooky how similar they are.
I mean, look at this. The parallels are just uncanny. Back in '99, the whole market was being propped up by a handful of tech stocks with absolutely bonkers valuations. Does that sound familiar? Today, it's the Magnificent Seven. And check this out. Back then, when savvy investors started to get jittery, they began quietly shifting their money into adjacent fields. And what are we seeing today? The exact same playbook. Money is pouring into robotics, clean energy. It's like everyone's looking for the fire escape before the alarm goes off. So, okay, let's add it all up. You've got the circular money flow, you've got the historical hype cycle model, and you've got these almost perfect parallels to 1999. The evidence for an AI bubble, well, it's looking pretty darn strong. But, and this is a big but, the story doesn't stop there. The really fascinating question isn't if it's going to burst, it's what comes next. Because a crash, when it happens, is never just the end of the story. It's more like a reset button, a moment of reckoning that forces everybody to stop and rethink, well, everything. And a lot of the time, the stuff that gets built from the wreckage is way more important and way more lasting than whatever the bubble was about in the first place. And history gives us a very clear, very predictable roadmap for this. Crisis always leads to new rules. Just look at the pattern. After every big financial blowup, we get new regulations designed to make sure it doesn't happen again. The savings and loan crisis, the Enron scandal, the 2008 financial meltdown, every single one led to major new laws. So, if this AI bubble does pop, you can bet we're going to see a whole new wave of rules targeting that tricky space where big tech meets big finance. Now, this might sound a little crazy, but what if a crash isn't the worst thing in the world? There's a school of thought that says it's like a painful but totally necessary economic reset, like a forest fire that burns away all the dead wood and speculative junk, and in the end, it forces everyone to get back to basics and focus on building things that have real, actual, lasting value. And that kind of reset could be a massive opportunity, a real chance to change the direction of AI, to shift the focus away from just replacing human jobs and instead to use it to augment us, to make us better. It could be the moment we finally start to tackle the insane concentration of wealth and power in the tech world. And maybe, just maybe, start building an economy that's really about human well-being, not just chasing the next big hype cycle. So that's where we'll leave it. Look, bubble or no bubble, this AI mania is forcing us to have a conversation we probably should have had a long time ago. Because if and when a crash comes, it's not just going to be about numbers on a screen. It'll be a rare opportunity to hit the reset button, to rethink our priorities from the ground up. And that leaves us with the biggest question of all. Forget the hype, forget the money. What kind of future do we really want to build with this incredibly powerful new tool?